BNB soars 33% within 24 hours as crypto market begins to recover. And here are likely the reasons why. Binance Coin has demonstrated a rise of 33% since yesterday, and head of Binance, 𝙏𝙗𝙬𝙧, noted in his recent tweet, typing BNB. In the meantime, the transaction volume on the BNB chain has soared to a high last seen nearly a year and a half ago. XRP, ADA, and SOL have also recovered to within 15 to 20%. BNB recovers by 33% as its transaction volume soars. Since last morning, the native cryptocurrency of Binance Exchange BNB, ranked 4th on CoinMarketCap, has added a whole 33% to its market value. At press time, the coin is trading at $305, climbing from $230 to that level. Prior to that, on April 20, BNB began to decline for the $428 zone, reaching a low of $227 on May 12. The Twitter account of the BNB chain has posted a tweet saying that the volume of transactions on the network has soared to record numbers last seen in December. Looking at that chart, that's a massive bump. Is the crypto market recovering? Is this a bounce or is it a bull trap? Well, only time will tell. Before we continue with the news, Iberian Crypto is a crypto trading execution site where users get the benefit and freedom of social trading. Now, the meaning of this is you use your API keys to connect Iberian to your exchange, and then you can choose one of the pro traders to trade on your behalf. Anytime they put a trade in, it mirrors on your side. You're in control, it's spot trading. If you don't like the trade, you can just go and close it. If there's enough profit on a trade and the trader hasn't closed it yet, you can go and close it. If you don't like the way the system works, you just disconnect your API keys. The link will be down in the description. Make sure to check it out and don't miss out on possible gains. The Kava network USDX tumbles to 65 cents as yet another stablecoin 𝙏𝙝𝙖𝙬𝙧. Quick take, USDX dipped to almost 55 cents on Wednesday and is currently changing hands at 65 cents. Kava Labs said it's offered USD as one of the collateral assets to mint USDX. Kava network native decentralized stablecoin USDX has lost its parity with the US dollar. The stablecoin has a market cap of more than $115 million, according to CoinGecko. USDX dipped to almost 55 cents on Wednesday and is currently changing hands at 65, well below its supposed dollar peg. What may have caused the USDX to lose its dollar parity to not clear, unlike algorithmic stablecoins such as those provided by Terra. Kava network USDX can be minted as a loan backed by collateral reserves. A likely explanation coming via Twitter from Kava Labs, the development team behind the stablecoin, is that USDX lost the peg because of its exposure to Terra USD or UST, an algorithmic stablecoin that recently collapsed. USD accounted for some of the collateral backing USDX, along other assets including Kava, Cosmos, Wrap BNB, and Ether. The whole deep backing of USD has made the market stumble. I don't think it's a sell-off of retailers, it's market manipulation, and that's my opinion. What's yours on the current market dump? Digital assets exchange Crypto.com lists two low-cap altcoins as crypto markets search for support. Singapore-based exchange giant Crypto.com is adding two small-cap altcoins to its roster amid a market-wide slump. First up is Lido, LDO, The government's tokens of decentralized staking platform Lido Finance, which offers staking solutions across several popular blockchains. Lido Decentralized Autonomous Organization grants holders of the Ethereum-based token voting rights on projects, parameters, upgrades, and staking protocols. Back in March, the Silicon Valley-based investment firm 𝙏𝙗𝙖𝙬 revealed it was backing Lido because the project democratized the proof-of-stake process by both making minimum deposit amounts attainable to everyday crypto investor, as well as offering an alternative to relying on centralized exchanges. Crypto.com says that the LDO will be available for purchasing using a variety of fiat currencies. At time of writing, Lido is following the overall crypto market trend, down 11.29% and priced at $1.59. The next altcoin to join the Crypto.com app is the blockchain transaction tracking protocol, 𝙏𝙗𝙖𝙬𝙧. According to the announcement, 𝙏𝙗𝙖𝙬𝙧 is a next-generation platform for real-time monitoring of events across different blockchains, featuring analysts' tools for blockchain technology across industries. With 𝙏𝙗𝙖𝙬𝙧, users can easily integrate blockchain infrastructures into exciting businesses and workflows. Native token PRQ was built on the Ethereum blockchain and powers the project's ecosystem. Holders can lend their tokens and earn passive income through staking in liquidity pools. On Tuesday, 𝙏𝙗𝙬𝙧 was trading just below 17 cents but fell over 50% to 8 cents by early Thursday. PRQ has since recovered by 12.5% and is currently trading for 9 cents. Now, looking at these two coins, Lido and 𝙏𝙗𝙬𝙧, I'll recommend looking at them and getting a small bag. We've seen it when coins go onto major exchanges, they do have a small pump happening. What are algorithmic stablecoins? Now, this is an interesting post due to the fact that Terra's UST was an algorithmic stablecoin. So, what did happen with Terra Luna? While most stablecoins are backed by reserves, algorithmic stablecoins use math and incentive mechanisms to maintain their fiat peg. Decentralized finance is a complex and rapidly developing industry full of experimental and innovation, and building on the physical and ideological foundations of more efficient, censorship resistance, and open decentralized financial systems. Algorithmic stablecoins exemplify these threats: part monetary economics, part financial markets, part mathematics, and part technology. Sitting at the intersection of money and blockchain technology, they are new and complex and pose many challenges as unanswered questions over how the future of DeFi will unfold. In this article, we'll explore more what algorithmic stablecoins are, how they work, and they differ from conventional stablecoins. So, what are algorithmic stablecoins? Stablecoins are cryptocurrencies designed to hold a certain value relative to something else, typical a fiat currency such as the US dollar, because stablecoins are pegged to an accepted and stable value. Investors or traders often use them to stay in crypto markets while protecting themselves against market price volatility. The majority of stablecoins aim to achieve their peg using some sort of collateral mechanism. Circulation stablecoins are backed by assets whose value should guarantee the stablecoin's value. Most major coin stablecoins, such as USDC and Tether, are collateralized by off-chain collateral like USD that is held with a centralized entity like a bank. However, stablecoins can also be collateralized on-chain using decentralized mechanisms, as in the case with DAI. Algorithmic stablecoins are different. algorithmic stablecoins in their pursuit form are completely uncollateralized. Their value is not backed by any external asset. Instead, they use algorithmic specific instructions or rules to be followed, typical by a computer, to output some results. These algorithmics are optimized to incentivize market participant behavior or to manipulate circulation supply so that any given coin's price should, in theory, stabilize around the peg. How do algorithmic stablecoins work? The litmus test to determine if a stablecoin, algorithmic or otherwise, works is simple. How well does it maintain its peg? Algorithmic stablecoin designers use various mechanisms to help the coin maintain its peg. Unlike most stablecoins, with algorithmic stablecoins, these mechanisms are written into the protocol, publicly available on the blockchain for anyone to view. Below are two common uncollateralized algorithmic stablecoin models. Illustrate assuming a peg for $1. Rebase. Rebase algorithmic stablecoins manipulate the base supply to maintain the peg. The protocol mints, adds, or removes supply from circulation in proportion to the coin's price deviation from the $1 peg. If the coin's price $1, the protocol mints coins. If the price smaller or actually bigger than $1, it burns coins. Coins are minted into or burned from coin holders' wallets. And the last one is Sinuage. Sinuage algorithmic stablecoins use a multi-coin system wherein one coin's price is designed to be stable and at least one other coin is designed to fluctuate. That's stability. Single-rage models typically implement a combination of protocol-based mint and burn mechanisms and free market mechanisms that incentive market participants to buy or sell the non-stable coin in order to push the stable coin's price towards its peak. A third model, fractional algorithmic stablecoins, is becoming increasingly popular. Part synchronized, part collateralized fractional algorithmic stablecoins aim to maintain their peg by combining the base mechanisms from pure uncollateralized stablecoins and their collateralized counterparts. Frax Finance pioneered this model. What are some examples of algorithmic stablecoins? Ampleworth, Basis Cash, USDD, UXD, and UST. And we've just seen the unpacking of UST. While algorithmic stablecoins sounds great in theory, they have ways to go before they are trusted as stable stores of value. At the time of publication, no algorithmic stablecoin has managed to achieve a consistent stable peg. As such, their use case tend towards speculative arbitrage traders. At the time, algorithmic stablecoins provide ripe grounds for innovation. They represent opportunities to push the bounds of what is possible in DeFi, attracting an eclectic and brilliant bunch of thinkers and builders who are innovating and iterating on existing models. Like other stablecoins and crypto at large, the regulatory story will loom large in the algorithmic stablecoin story. More than any other cryptocurrency, stablecoins pose the biggest threat to governments' fiat-based money systems. Algorithmic stablecoins, with their censorship-resistant qualities, pose an even greater theoretical threat than their non-algorithmic counterparts, and lawmakers are increasingly paying attention to stablecoins. In May 2022, US Treasury Secretary Janet Yellen called for stablecoin legislation to be passed as a matter of urgency. However, questions remain over the validity of algorithmic stablecoins. Yellen was speaking in response to the May 2020 collapse of Terra USD and the Luna cryptocurrency used to maintain its dollar peg, an event that severely dented confidence in algorithmic stablecoins. UST collapse prompt much soul reach among advocates and algorithmic stablecoins, while some are now skeptical that they have a future at all. Well, we've seen the collapse of UST. Which stablecoin are you using? Which stablecoin are you feeling safe with? Leave me your thoughts and concerns down below. And remember, smash that like and subscribe button. Have a great one.